down 55 and a quarter. That may be an old quote here. Let me get an update here. Right now down 54, 1.95%. So bouncing a little bit to start the comeback here if we get one. But Megan, we want to talk some McDonald's. All these people at home, are they still going out to get some quarter pounders and some McNuggets in order to take a little bit off of the plate in terms of making food at home?
You know, when we look at McDonald's, overall, on a year-over-year perspective, we have purchase intent down about 7% year-over-year pacing right now. I think for the quarter that just ended, March 31st, purchase intent levels were down about 5% year-over-year. But I don't think that this is surprising. You know, obviously, people aren't going into the store. You know, you're not necessarily driving to and from work. So it makes sense. Even the company announced, you know, that same-store sales were down going into, you know, amidst all of this coronavirus new normal that we're facing. But one bright spot that we are seeing is really starting in the middle of March, we started to see an uptick in delivery mentions for McDonald's. So people are still getting the two most popular items, Big Macs and Happy Meals. They're just getting it via delivery now instead of actually going to the store. And so what you can see here, this chart, these are actual delivery mentions, and you see that uptick you know, at the middle to end of March, and they're sustaining so far. So this is definitely something that we'll watch moving forward to see if they can convert, you know, maybe they're convert new users, maybe people like using the app and the delivery service.
Megan, here's my question. All these fast food restaurants should be doing more delivery during this period. Do you have any indication who's the winner in this? I mean, McDonald's, the chart you put up in McDonald's is skyrocketing in terms of popularity of delivery. But is any fast food company standing out above the other ones in terms of delivery?
I think that McDonald's, it's definitely one of those best of breeds. They're definitely a leader. You know, when we look at even mentions of like Starbucks being delivered, we don't see that type of trajectory that you saw with McDonald's. Another one, though, that we do see that's doing really well is something like Chipotle. But, you know, Chipotle is more of a fast casual. Someone could argue that it's a little bit of a step up from McDonald's, but they're executing very well. And obviously McDonald's is executing very well, too.
Megan, when I look at this in general, in terms of the response in the stock price, McDonald's was definitely not insulated from the reaction. You pointed that out as well. Traded all the way down to 124 when the market was kind of making its lows. Already bounced back a significant portion of that. It's 177. It has earnings at the end of the month. But you pointed out, like, hey, you know, less people are going out and buying things. That's going to impact McDonald's as well. But when you look at McDonald's and people still being loyal to this brand and using the delivery service, in the long run, is it better for somebody like or a company like McDonald's to be on these delivery services, or are they still going to benefit from people coming in or going through the drive-through overall, or is it just good for them to have all channels that they can?
You know, I think that McDonald's has done a really good job, you know, prior to this COVID outbreak, with their technology, with being able to present the way they present things to consumers to buy on the menu. You know, I know that they have some pretty sophisticated, like, things change based on the weather, based on the location, based on the popularity in the region. And so they've been able to increase their average ticket size that way. So I think that's smart. But I think it's also smart, you know, they've expanded their number of delivery partners. They used to only work with Uber Eats, and now they onboarded DoorDash just this past summer. And so really, since they kind of expanded the ways that people could connect and these delivery options, we have seen a purchase intent increase alongside that. So I think moving forward, really the key is, you know, are these new delivery app users, will they keep using it? And will that help to kind of support McDonald's in the short term, but also translate to this long-term adoption?
And Kevin, I want to get your ideas on this as well. As obviously McDonald's, to Megan's point, has made a sizable investment into technology and the infrastructure to make it more of a lean company, and also, you know, be able to provide more and more of, you know, you just go in there, you click on the screen, you order that way, as opposed to interacting with a cashier and things of that nature. You know, those are all the things that, you know, McDonald's has done to prepare itself for the future, as well as partnering with all these different delivery services. You know, this is something that a company like McDonald's can maybe do in terms of, you know, basically operate from a lean staff, partner with delivery services, still get their food out to people that a smaller business or a smaller restaurant maybe can't do. So it's, again, one of those examples of, these bigger companies being able to weather the storm a little bit better than some of the small businesses.
Of course. And, the biggest question that we always talk about on this show in terms of delivery is the last mile, right? Who's going to get that product to the final destination? And McDonald's doing this. The real question that I have, and the real, bajillion-dollar question, if you're trading not only McDonald's but their delivery counterparts, is you're going to see a spike during this period, right? But how much of that spike remains after we get through this, right? Does the spike in deliveries that's up, you saw Megan's chart, it's up exponential. How much of that stays afterward, or do we go all the way back down to where deliveries were? I think that's the question that will help the fast food companies and also help the delivery companies, is how much can we sustain the jump in deliveries, guys?
No, and I think, Kevin, you make a great point in terms of the saving grace. Maybe it is for some of these delivery companies. I'm sure Megan has some thoughts on that, but I would almost add a second part to Kevin's question, Megan, or statement is this enough to offset the amount of destruction of their normal demand that they would have in their business through their drive-through and people dining in their McDonald's restaurants? Because we've already seen this stock obviously be discounted, but is it been discounted enough to offset, or is this delivery enough to kind of keep this company to cross this chasm or that we're seeing in terms of demand and the economy slowing down to weather this storm so they can resume normal business on the other side?
I think that the delivery definitely helps, and our data with the McDonald's food delivery specifically is really strong, stronger than some of their peers. And so from that perspective, I think that that's a positive sign for McDonald's. But overall, purchase intent mentions are still down quarter over quarter. They're pacing down 7% year over year. So that shows us that, this, I don't know if that can completely make up the gap. I think that would be a stretch, but it definitely helps, and it's definitely better than having no interaction with consumers, right? So I think that, if you're looking for a company in a space, or you try to pick out these best of breed, and we've talked about this a little bit, and I think McDonald's is definitely an example of a best of breed company that's pivoting and stepping up to try to meet consumer demand during this time. I think it's also positive for McDonald's that happiness during this time has actually increased 2% year over year. So consumers are still happy. People are still talking about McDonald's, but they're definitely going to be short-term impacts for people who, you can't go to a restaurant.
So, Megan, I think you just said a lot of really great stuff there. You gave us some numbers. So happiness up 2% year over year.
Yeah.
That's a long-term indicator from your guys' perspective, and especially in something that's kind of seen, and I don't mean to, discount McDonald's and their products, but on the lower end of quality in terms of what you can get when you kind of even compare it against Chipotle, which is kind of seen as a different style of food. And so it's in the fast food space, not always seen as the highest quality of meals in terms of health or, really anything along those lines. So to see happiness uptick is probably a good sign for the long term. But you just said purchase intent mentions are only down 7% year over year. You compare that to other industries and other things in terms of impact of the coronavirus. If that ends up, corresponding to revenues, that's not that bad. And the stock's already been discounted, a lot more than just 7%. And so there's more factors that go into that. But if that's all that the impact would end up ultimately being, I would say that's a pretty strong win for a company like McDonald's. Is that how you're interpreting the data as well?
Yeah, obviously, purchase intent is down year over year. I don't think that there's necessarily a direct correlation with, down 6%. The stock should be down 6%. But it's definitely, it's positive that we do see this uptick in delivery mentions, that we do see this support from a happiness perspective. And, this is something that we'll be watching to see, as Kevin mentioned, is this new behavior, can it be sustained, and can it help to grow McDonald's user base? And so I think that that's what we'll be watching long term, but definitely one of the best of breed companies that we're looking at right now.